Hi guys, and welcome to this week's Symax Fintech Markly Insight. As usual, broken into 4 parts, looking back at last week, looking forward to this week coming out, then the macro outlook, and also some technical analysis. So I hope you watch all of it. As usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. We're not trying to provide you with advice, we're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience, and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital. So last week there was plenty of central bankers speaking. They're very mixed views coming out at the moment, but obviously the main focus was Powell's towards the end of the week, where sort of he just kept this higher for longer coming through. But of course, during the week, geopolitics pretty much overpowered any data. Just the risk of the fact that the Middle East could escalate the situation there. Okay, so that did push stocks lower. The S&P was breaking major support levels, but let's have a look at the data of what came out last week anyway. So because there was quite a few surprises. So in the US, the Empire State Manufacturing was due to come in. It came in at negative 4.6. It was expected at -7. Retail sales came in at 0.7% month on month, but it was only expected to come in at 0.3. And if you exclude the autos, it came in at 0.6 and it was only expected 0.2%. And then capacity utilization crept up just a little bit more, 79.7. Now 80 and above is growth, so you're practically there. And the US hasn't really sort of lost that so strongly as other countries. Industrial production up 0.3%, and that was expected to come in sort of 0. Now the beige book, I really like the beige book because if you go on the website, the Fed's website, and just type in beige book, you can look, and all the members of the Fed, they all give their own outlook, but it's not so much data driven. It's much more about their sentiment of their expectations for the economy, and of course you can get that take on each individual member as well, which is good rather than the collective. Initial jobless claims come in at 198,000. It was expected at 212, and the Philly Fed manufacturing was -9. It was expected -6.6, and as I mentioned, Powell just confirmed this higher for long, which I've been talking about practically all year with the these YouTubes that we do, and also with the daily newsletter that we send out. Of course, that's the US. They're in a much stronger position. And then we look at the EU. ZEW sentiment came out. That was again positive. It came out at 2.3. It was expected at -8. And then CPI at the core was 0.2 month on month, which is 4.5% year on year, and that's in line. Germany PPI was down sort of -0.2% month on month, and that was expected to come in at plus 0.4%, so that was a big change there. And year on year, that's -14.7, and it was expected at 14.2. So that's promising. They're better numbers, not worse numbers than expected. which FX Street seemed to get that wrong because they had them as red numbers when they were actually better than what was expected. Okay, so wholesale price index in Germany was 0.2% month on month, which is negative 4.1% year on year. ZEW economic sentiment came in negative only 1.1 when it was expected negative 9. And current is 79.9 when it was expected to come in at negative 80.5. So again, a little bit of an improvement there, negative 79.9. So, maybe things are just sort of bottoming out for the moment. Whether that's going to remain like that, obviously, is going to depend with all these sort of political flashpoints that there are sort of building around the world. The UK average earnings 7.8%, which is 8.1% if you include the bonuses. CPI came in at 0.5% month on month, 6.7% year on year, which is still way too high. The target rate's 2%. And PPI came in 0.4% month on month, 2.6% year on year. Retail sales just came in, well, the index came in line. Retail sales themselves were down 0.9%. They was only expected to come in at 0.1% month on month, so that was a big sort of surprise there to the downside. And that equates to a 1% year on year, and again that was expected to come in at flat at 0. Australia employment data, so job growth there was only 6.7 thousand when it was expected at 20,000. In New Zealand, CPI came in at 1.8%, was expected at 2, and that's quarter on quarter. They prefer quarter on quarter for that rather than the monthlies, which is 5.6% year on year. In Japan, industrial production was negative 0.7% when it was expected to be 0, and that's negative 4.4% year on year. So headline inflation was a little bit lower at 3%, but that's mainly due to the fact that the government there has energy subsidies going through, and they've extended that till the end of this year. So that is helping to keep that inflation a little bit lower. And obviously, if you was looking at the markets last week, you'd have seen that oil prices were higher, gas prices a little bit mixed. So it just means that inflation's a little bit stickier in Japan. So they may change the YCC, so that yield curve control that they're doing. And they may also, to get more flexibility with it, they may cut it from 10 years to 5 years. In China, data was a bit better. So GDP 1.3% quarter on quarter, which is 4.9% year on year, which is not bad considering they've really struggled, especially from real estate. And industrial production 4.5% year on year, which was higher than expectations. Retail sales was 5.5% year on year when it was only expected to come in at 4.9%. And of course, the central bank left rates unchanged at 3.5%. And then finally, Canada, manufacturing came in at 0.7% month on month when it was expected 1%. CPI, the core, came in at 2.8% year on year, and the headline 3.8%. And they're both lower than expectations. And retail sales was negative 0.1% month on month when it was expected to be negative 0.3%. Of course, just the sort of, the central banks again just remained mixed. Powell was speaking, but at the end of the day, at the moment, it's much more about what's going on with Russia, Ukraine, and also now Israel and the surrounding nations to them. If that's going to escalate or not, which if it does, that can impact supply chains. So that's pretty much for the highlights of last week. Now we'll move on to what's coming out this week. So just moving on to highlight what we do as a company. Obviously, the majority of you are probably familiar with that, but there's always some new people viewing these. So it's just to give you a little bit of an insight into Symax Fintech as a company. So apart from the YouTube, we provide daily newsletters, which include sort of global headlines, global news, and then as an option, there's fresh chart levels and pivot points each day. Then when it comes to sort of workshops, you know, if people are looking to get into trading, then our sort of introduction to trading is a great one, trading for beginners. And then for others that are already trading but have got gaps in their knowledge or their trading skills, then we can help you with those as well. We do offer 1 week courses. They can make you feel competent and confident in just 1 week. Does it make you a trader? No, but does it give you the foundations on which to build your trading career? For sure. And you know, if you've got that inner trader, I will find it. And of course, now you have the option of going for one of our new course, which actually includes a free trading challenge attempt as well. And then if you're really serious about making trading your career, then our comprehensive accredited masterclass is the one for you. It's designed to provide you with all the knowledge and trading tools required to navigate any market conditions, and also any asset class. And the next one of those starts on the 19th of June. So you've got a week to register if you're interested. Then trader mentoring, you know, some people don't want to go through courses, but they do need help still, and I can certainly do that. Consulting, we consult to companies around hedging FX and commodity exposure. And then of course we provide you know, a mass of educational content that can be to individuals, exchanges, to brokers. And as I just mentioned, if you're looking for that funded account, you know, maybe you're a bit sort of undercapitalized, or possibly you just don't want to use your capital, then there's the opportunity to go through the challenge and hopefully qualify for a funded account through one of our partners, Nordic Funder. If you'd like to contact us, it's info@symaxfintech.com. Any questions you'd like to aim directly at me, it's chris.tubby@Symax Fintech. Sorry, go back to that one, christubby@symax-int.com. Just get so used to the fintech part. And of course, look forward to seeing you in the second part.